The UK vote on whether Britain should remain in the European Union just 2 weeks away, but could uncertainty over there actually be a good opportunity to put your money to work? Larry Glazer on why the UK stock market could be a good bet. Larry, making that assumption, then I think you would say there would be a stay. If you're making a bet on investments right now in the UK, you're betting also that they'll stay in the EU?
Look, Charles, either way, we know that uncertainty breeds opportunity. And what you really have is you have tremendous uncertainty. You've got basically split polls. Some polls favoring stay, some polls favoring go. But regardless of what the outcome, we know that UK stocks have been discounted, at least to some degree, because of this uncertainty. And as a result, we've seen UK stocks underperform US stocks, both on a year-to-date basis and on a 12-month basis. From a PE or valuation standpoint, they're cheaper than many other sectors of the global economy. And in many cases, these are really high-quality companies. These are the types of companies you want to own, Charles.
But
so when you look at the composition...
What about the threats? President Obama went to the UK and actually threatened them. He said, listen, you guys don't stick in the EU and you go to the bottom of the rung. Angela Merkel, not so straightforward, but perhaps would take the same sort of approach. And then, of course, there are the question marks about what happens to their economy if they don't stay in, with Scotland saying, you know what, we don't want to be a part of this either.
Yeah, well, again, the composition of their economy, what we're really talking about is what's in this. What are the companies we're investing in? What are the stocks we're investing in? And if you look at the UK stock market, there's an exchange-traded fund that trades here that tracks the UK stock market. We're talking about a yield of roughly 4%. In a yield-starved world, that's really attractive. And what comes with it are really high-quality companies. So look at the sectors we're talking about, Charles. We're talking about companies like British American Tobacco. We're talking about companies like Diageo. We're talking about healthcare companies like GlaxoSmithKline, AstraZeneca, the types of companies you want to own in an uncertain world. Even energy names that have been very discounted, BP, Royal Dutch Shell, the financials, HSBC. This is exactly the portfolio that I'd like to own, and I get it at a discount because of this uncertainty. Regardless of what the outcome is, these multinationals will survive and they will persevere despite what might be short-term volatility.
You know, I love the way where you're going with this, and I think you could have applied the same argument with like the oil stocks coming into the year, the Exxon Mobils or the Chevrons of the world. But the short-termism that haunts this market,
so true.
It's tough, you know. I mean, and people are the knee-jerk reactions when I see people sell quality names over and over again for big losses. I just scratch my head. But that is a risk too, isn't it?
It's so true. And anytime you see that level of uncertainty, look, the world is uncertain, but this is one particular place where the uncertainty has actually priced in a discount to high-quality assets. It's hard to find quality at any sort of a discount in this market because investors are so starved for opportunities. And this level of political reactionism could create that opportunity. So you want to have your shopping list. Maybe the opportunity is coming up over the next few weeks.
But you want to buy before the vote, though. That's what you're saying. You got to be in there. You got to be long before they actually vote. All right, Larry. We're going to bring you back and talk about this. All right. Thanks a lot, buddy.
My pleasure.
See you soon.